For a lot of people, investing is just something that rich people do. But what if I told you that investing was a lot less complicated and tricky than you may think? Keep watching and I'll show you exactly how you can begin investing simpler and easier than you ever thought. First things first, saving is not investing. Saving looks like putting your money into a savings account or putting cash underneath your mattress. This is absolutely subject to inflation and has little to no growth at all. So if saving is not investing, then what is investing? Investing is the process of you buying equity into a business, company, or security with the intention of it making you more money. With your savings account, that money is just sitting there accruing either very, very low interest or just being eaten alive by inflation. You should only ever invest into these businesses, companies, and securities if you believe in the long-term future of that security. You should only ever invest in these businesses, companies, and securities only if you completely believe in them and their future. A lot of people, they jump in on these stocks or on these cryptos because they have this FOMO, this fear of missing out. Let me tell you, if you go into a security with FOMO, you will get burnt. You need to believe on why you're investing in order for you to be able to stand strong on your investment, because when those dips come, and they will come, you don't freak out and you understand that I'm in this for the long run, and I know that in the long run that this company is solid enough where there will be a return on my investment. The things the average consumer typically invests in are individual stocks, ETFs, and bonds. So what exactly is a stock? When you hop on an exchange and you buy a share of a stock or you buy a share of a company, what's really happening is that every single publicly listed company has a certain amount of shares available. Every single share is a part ownership of the company. I believe Apple has about 15 billion shares floating around. So if you buy a share of Apple, you would be a 1/15 billionth owner of the company. The reason why people do this is because if you are a partial owner of a company that you believe in, then you believe in the future that this company will be profitable and worth more in the future, thus making your ownership in the company more valuable. That's why if you buy a stock at $100 and the company does really well, the value of that company increases and you're able to share your ownership in that company to somebody else for a larger price. It goes the other way too, that if you buy ownership into a company and it does really poorly, that company's worth less now, meaning that you might have to sell your ownership at a loss, or you can just keep holding it until you believe that the company could be back at where it should be. So long story short, when you buy a share of a stock, you are buying a portion of ownership into the company. That is why it is so important that you believe in that company in order for you to make the optimal amount of gains. Another type of investment that I don't see people invest in much so now, but I know it used to be very popular, and that's investing in bonds. So what a bond is just giving the government a loan of your own money, and they give you a fixed return of that money at the end of a time period. So if I want to give the government $10,000 for 2 years, they might give me a rate of somewhere around 4.5%. So I give them the $10,000, and in 2 years, I get my $10,000 back with a 4.5% interest on it. It's basically no risk on it, and the returns are pretty low. So that's kind of the drawback. It's low risk, low reward. That's kind of how investing works. Another investment that a lot of people make, including myself, which about 40% of my portfolio, is ETFs. So what is an ETF? An ETF is an exchange traded fund. What this means is that a fund or some type of company will take partial shares of a bunch of other companies and combine it into one. For example, the SPY. The SPY is an ETF that follows the S&P 500 to a T. If you want to learn more about what the S&P 500 is and all about it, I just did a video on it. It should be up here somewhere. Go ahead and click on it, watch that, super informational. The SPY is an ETF that takes the top 500 companies, one share of every single company, and combines it into one share. So instead of you buying one share of 500 companies, you buy a partial share of all 500 companies in one. That's why the S&P 500, I think it's somewhere around $5,500, $6,000 to, that's what the index is valued at. The SPY, I think it's right around $550 or $600. So it's like 1/10 of a ratio of the S&P 500. These ETFs make it really easy for beginners to get into a broad market of companies without putting all of their eggs in one basket. That is the beauty of ETFs, is that you can look at the top 500 companies and invest in them all at once, and it's low risk. There are also other ETFs that follow sectors like technology or real estate or high growth, but the main beauty of ETFs is that they are mostly diversified, meaning that if one company goes down, your whole portfolio doesn't go down. Only 1/500th of the SPY ETF goes down. So it's really easy to diversify. Don't put all your eggs in one basket. Don't do that. So as I just mentioned, there's a couple of investments that are really popular: stocks, bonds, ETFs. But the real question is why should I invest? First things first, you should invest because of compounding interest. You see, if you invest $100 into an ETF like the SPY, who on average returns 10% a year, if you do $100 for 30 years, in those 30 years, you will have $200,000. These returns on compounding interest are life-changing, and the goal is to start as early as possible. As soon as you have a paycheck, you should begin this process of investing. A little bit goes a very long way when stuff compounds. Another reason is avoiding inflation. When cash just sits, it is subject to losing value. Here's what's confusing. When you hear the word inflation, you hear the term "my dollar is losing value." And it gets confusing because your dollar is still worth $1. So it's not that your dollar is worth less now. Think of it that everything else is just more expensive, meaning that your dollar doesn't go as far as your dollar used to go. But when you're invested into some type of securities, whether that's real estate or stocks, it moves with the market. If the market is subject to inflation, it'll move with it, versus in cash, you just lost value. Another beautiful thing about prioritizing investing into your budget is that if you take part of your budget out and you make it a non-negotiable that you're going to invest this much a month, it is bound to cut your spending down. If you make $1,000 a month and you sit here and you go, you know what, I'm going to invest $100 a month moving forward. If you live your life thinking I only make $900 a month, it will make your means cut down a little bit. You might cut out some expenses that you don't need. That $100 a month will give you a much higher return on your investment over time than something silly like buying clothes or whatever that looks like. When you prioritize investing, it creates such good habits on how you view money. When you look at things and you're gonna buy something, you start looking at things on how much value does this bring me? You see, when I started investing into stocks and ETFs, I started looking at things like, how much money will this return me in the long run? And that's how I started treating my daily life. And when I look at cars now and I want to buy a car, I'm looking at that like one of the worst assets you could possibly own because of depreciation and how much you lose on it. And so that stuff pains me a lot more now since I know how far $20,000, $30,000, $40,000 can get me. So to summarize, you should start investing now. It can give you such a good edge on your future. It can provide you so well financially and set you up for success. The earlier you start, the better. So you might be sitting there watching, thinking, Ruben, you've convinced me, I'm gonna start investing. Well, how do I start investing? Here's how. First things first, download an exchange. An exchange is just a platform in which you can trade, buy, and sell stocks, ETFs, stuff of that sort. My personal favorite is Robinhood. That's what I use, but there's other exchanges like Charles Schwab or Vanguard. Choose whatever you like. I like Robinhood the most, but do whatever you like. The second step is deposit some money. If you have some money set aside and you want to put it into investments, put that money into the exchange. Next, find what you want to buy. It's a little bit fun because it's kind of like guilt-free shopping. You can shop around and buy whatever you want, but you don't feel bad about it because it'll potentially make you more money in the future. So shop around. What ETFs are you interested in? What individual stocks are you interested in? Apple, Microsoft, S&P, VOO, whatever that looks like. Just look, think, do your research. On that same topic, stick to companies that you know have a bright future. If you really believe in the future of Amazon, maybe invest in Amazon. If you really believe in the future of Polestar electric cars, invest in Polestar, but only invest into things that you have a high conviction for. Another piece of advice that I have if you are beginning to invest is don't put all your money in right away. I am a firm believer in dollar cost averaging, meaning that if you have $100 to invest, maybe put 50 in today. And over the next couple of weeks, whenever there's a market correction or a dip, put 10 more, put 15 more. And with every paycheck that you get and every bonus that you get and you want to put more in, wait for the market corrections. Wait for there to be a day where it drops 3, 5, 7%, whatever that looks like. And that is your opportunity to buy some more. Over time, what you'll notice is if you keep buying on the dips, your dollar cost will average out. And you'll notice that your portfolio isn't just stuck at one place, but it is fluid and moving a bit with the market. So we covered the different types of investments, we covered on how to start investing, but you might be wondering, how much do I invest? My personal advice is this: it is less about how much you invest and more so how often you invest. I would say every single paycheck, every bonus, every single time you get a cash gift, make yourself a boundary that I will always contribute this much of my paycheck to investing. That way there's a constant, steady flow going into your portfolio. The goal with this is to create a good financial habit. That way you learn to prioritize and to value investing. And since we're invested into stocks that we care about and that we value and see a bright future in, when there are those days with market corrections and you look at your portfolio and it's down 3, 5, 7% and it's red and you're scared, don't be. We're not here holding for the short term. We're here holding for the long term. And what you'll notice is after 1 year, after 2 years, after 3 years, you'll notice that there is a trend upwards. So hold high conviction stocks, ETFs, for longer periods of time. Hold it for a longer period of time and you're gonna see a higher average return. So if your stock goes down on a random Wednesday, don't freak out. This might be the greatest opportunity for you to buy some more. We are in this for the long haul. We're not here to make money quick, to make money right now. We're here so that way in 5, 10, 15 years, that we're set up for success in a way that we can enjoy our life without the stress of our bills, without the stress of any debt, without the stress of these things of life that come at us. We would be able to be set up so that way we can enjoy our vacations. We can buy that dream house that we want to. We can do whatever that we like to that would give the joy in our life of what financial freedom and what financial security does to one. Well, thank you for making it this far and watching for this long into the video. If you did find any value or you enjoyed this video, please consider leaving a like down below. It really helps me out. And please consider subscribing as well. I do cover a lot of financial topics, and so if you want to begin learning and follow along with me, go ahead and subscribe to the channel. With all that being said, if you have any questions, leave a comment down below or DM me on Instagram at Ruben Uzun. And if you started your investing journey and you invested into some stocks or ETFs, leave a comment down below of what you invested in. I would love to celebrate with you. But with that being said, keep investing, keep learning, and I'll see you next time.